and welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for February 27, 2010. Our website is blog.accendotrader.com, where we put together effective video, technical analysis trading plans on a daily basis. That's right. We believe in trading plans to keep us focused and disciplined so that we can be consistent traders. It keeps us abreast of what's coming down the market that can affect our current trades and as we scan for new trades. But by being focused, it cuts down on our research time so that we can spend time with family. Woohoo! So the week that was, well, the market, all three major indexes ended down for the week. Not that much, basically unchanged. When you look at it as probably doji candles, but we'll look at that when we get to our daily and monthly charts. The week was very volatile, not only as a week, but each day was very volatile. Big pushes down and rallies into the close. So it was a very volatile week. Which started off really basically on Tuesday. Monday was pretty much a consolidation day, but Tuesday we had a weaker than expected consumer confidence number. We were expecting 55, it came in at 46, and the market pushed down, and we were down almost 200, I believe, and then we rallied back just to be down 50. So, when you look at it on our market internals, you see down 50, but that doesn't tell us whole story today about how far we were down. But again, we rallied toward a close. Wednesday we came back on Wednesday, and then we had strong treasury auctions throughout the week. Bernanke assured the market that the rates will remain low, so the dollar took a little hit. Again, so the market rallied. And then Thursday we had initial claims come in higher than expected, so we did initially go down lower on Thursday, but we rallied back up into the close. And then on Friday we had better than expected fourth quarter GDP estimates, and we had a basically unchanged day on Friday. So good news is not pushing the market higher, as we've been talking about, and we'll see on our charts about where we are as far as resistance level. But bad news is pushing the market lower, and then buyers are coming in. So are we buying the dips? Let's talk about that. Next week we do have some move. We have ADP employment coming out on Wednesday, which is supposed to correlate to Friday's non-farm payroll and unemployment numbers. So we do have some potential as far as economic data to move the market next week. On Monday, usually for the past month or so, we haven't had anything on Monday as far as economic news, but you can see we got income and spending, PCE prices, construction spending, ISM index. We do have some economic data, unless they hugely miss, not sure if they'll move the market. And we really don't have anything on earnings this month. Hovenian, housing, Joy G, but not that that's really going to move the market. And we have a couple split plays if you're into that. Okay, we're just going to take a quick look at a visual representation of the market internals before we look at the actual numbers. We're looking at the SPX, and we're on a weekly chart. We are on a weekly chart. And what we can see here is a couple of things. I'm going to put my line right here, and you can see it's basically the midpoint. And as we look at that, you can see that this is basically, look right here, even inside of here, right there, here. You can see that we're at a point now where the market's either going to break through or we curve and go back the other direction. And you can kind of make an argument that this line right here is starting to curve to go back down under. And that's important to look at it when you think about where we are as far as resistance. Let's look at the actual numbers. The main thing that I want to show you when we look at the actual numbers is let's look at Tuesday. Remember, Tuesday was the consumer confidence day. And on our down day, down 100, and we can see volume picked up, and we had a bear's breath. We had more down volume than up volume pretty easily. And also on Thursday, when we look at here, we can see, although the market ended down 53, this was initial job claims, we rallied back up, but we were down big. But again, we can see a volume increase. Breadth is so-so, but we see the volume increase both on Tuesday and Thursday. Yet on our positive days, we don't really see the huge volume increase. As a matter of fact, on Wednesday, we see a volume decrease. And we saw very strong put-call ratios on Tuesday and Thursday also. So even though we're not at a one-to-one ratio, we do see more buying. There is reason to be a little bit cautious according to the internals. So as we pull up the daily chart, the overall question is swing high and new high, or a new higher low? What is the answer to that question? This past week's action says higher, a new lower high. This new, but we really need confirmation to get below the 50 moving average here, 20 moving average, to really confirm it. And we actually can have both. We can swing down here to make that lower high, but if we curve back up, we would have higher lows. So I know it's like a conundrum. What's going on here? We're speaking on both sides, but right now I'm going with the lower high until the volume on the buying side really shows it to me. The other thing to keep in mind is that we've been talking about is this consolidation range. Remember we were talking about this 10,200, which we came down and touched on Thursday. And this is a great visual of how we rallied back on Thursday only to be down 50 when we were down big. So that 10,200 range, and then we were talking about this 10,500 range. Now we haven't even come up there. We haven't even gotten close to there. Now we're looking at this 10,400 as an area of interest. So that's, again, an area what I would look at as far as trying to at least get to the 10,500 range. But again, the question is, what do we have here? What is the market trying to place in here? And of course, what's going to be our catalyst? And this upcoming week's catalyst is the jobs numbers. Let's switch to the NASDAQ. Now the NASDAQ is a little bit stronger, definitely a little bit stronger. Not as distinct lower high. We're consolidating here, but again with the NASDAQ, we're consolidating above the consolidation of November and December of last year, and that's holding up good as resistance of support. Our resistance right now is right here, probably at this 2250 level of our gap down here. So that's a key number to put in to see if we're going to break and again test the January highs. The S&P 500. Also, we can see sitting in our consolidation range. Here's 10,000, 1080. Up here at the top is 1120. This gap area right here of 1115 seems to be the area that we probably really want to look at versus 1120. So the question is going to be, what's going to be our catalyst to move higher? It's good to see that the 50 moving average is holding on strong as far as support, but what's going to get us to break higher up to make yet another swing high? Let's go to the monthly chart. On the monthly chart, we can see very visually how the 50 moving average is acting as resistance. We've come down, holding strong, and again, we would love to see this move higher. You can also see that we've done very good eating up a lot of this move down as a push down, but breaking the 50 moving average is really going to be a great psychological boost for our traders. On the Dow, you can see the same thing, except we're at the 50 moving average, and again, psychologically, it's going to be a very good boost to break that and close above on the monthly charts for the 50 moving average. And finally, on the NASDAQ, we can see that we're above the 50 moving average, and what's great is the 50 moving average is holding up as support. We can see this 2330 range acting as our resistance, matches up with the swing highs over here. And again, that could get us up here to 2500 or even the January highs. I'm sorry, this is 2007 highs. Moving on to the educational portion of our video, we're now using the book Trade Your Way to Financial Freedom by Dr. Van Tharp. And he's talking about the legend of the Holy Grail. And so many traders get lured into the market by the Holy Grail to get rich quick systems. And you know, in this section here, he's talking about the volatility breakout, buying the highs above the high of the previous day, below the low, the short. And that actually does work well in a lot of trending markets, but there's a lot missing from just that simple nugget. You know, when do you take a profit? Where's your stop if it goes against you? How much do you allocate per trade? Is this good for futures, forex, equities, ETFs? What is this good for? And even with those questions in mind that he talks about, the other thing is that there are great systems. I recommend systems out there. I think everybody should have a trading plan. But the question is, do you have the right mindset and the belief in your ability to execute that system the way it was intended? People go into trading rooms and they listen to all these gurus, and the gurus give out trades, but are you pulling the trigger every time? Have you mastered the system? A lot of times it's not the system, it's the person executing the system. So again, it's all about developing a system that matches your risk tolerance, and more importantly, that you have the belief that you can be a consistent trader. We got a great futures trading room that you guys know about. You can see how we did this week. Friday we'll have posted for you shortly. And if you're going to trade futures, we got a great broker for you. Intraday E-minis as low as $300. If you sign up through us, there is a 20 free contract, which can be $200 right there. Got a great charting platform for those of you who have all your scans, that do custom scans. And we do have a futures trading plan that I recommend that help jumpstart your trading. And we know that's because of the leverage that futures provide. As always, guys, we have a lot of links to help you guys be consistent traders, to develop the right mindset. But remember, trading on risk, you can lose all of your money.